Talk to anyone who's bought a home, and chances are someone somewhere along the line had given them the advice that you have to have 20% saved up for your down payment. Well, that's not really true anymore. And in today's video, I'll go over all of the options available to you in the modern market. Hi everyone, Avin here, your agent guide, and in today's video, I'm going to go a little bit more deep on the 20% down payment requirement myth. So let's get started by why do we even have this piece of advice anyway? Well, it all comes down to three letters, PMI, Private Mortgage Insurance. And what private mortgage insurance is an insurance product that you as the borrower pay for the benefit of the lender. That insurance covers in the incident that you default on your loan and the value of your home doesn't cover the remaining amount of the loan. So, if you purchase a home without having 20% down, what does that mean to you? Well, you're going to pay PMI. And PMI is typically going to cost you about 0.5%, 0.5%, up to about 2% of the total loan amount annually. Then that amount is divided over the monthly payments throughout each year. So let's say you took out a $400,000 loan to purchase a home. Your PMI payment is going to be somewhere between $2,000 and $8,000 and then divided out monthly on your mortgage statement. Of course, there are other factors that go into what percentage it is. Your credit score, the amount you actually pay down, it's all based off of what the risk exposure is to the lender to determine what the actual final percentage will be. So you're not going to be able to save up or choose not to save up that full 20% so that you can get into the market sooner. What are the mortgage products that are going to be available to you? Well, most frequently we see just a conventional loan, anywhere from 5% down and up. But around 2014, we got a new product called a conventional 97. It's a conventional loan, but with only 3% down, and you're borrowing 97% of the home's value. There are a couple of other programs underneath that are related, backed by the government, but those have some different specific requirements, and you should talk to your mortgage professional to see if one of those might be good for you. After the two conventional loans, we then have the FHA loan, and we see this quite a bit as well. FHA loans give someone with a little bit less than perfect credit and a little bit less than perfect debt to income ratios still be able to purchase a home. The disadvantage to having an FHA loan is that PMI is permanent because there is a higher risk of default and the government does back this loan up. And FHA loans have stricter inspection requirements. The home you're purchasing has to be seen as in good enough condition for the government to be willing to back it. So it also means that your loan isn't always going to be as competitive in certain home purchase environments. After the FHA loan, we then have two more government-backed products. The USDA loan for purchasing homes in rural areas with certain levels of income requirements in place, and the VA loan for prior service military members. Both of those products will allow someone to purchase a home with as little as 0% down. So now we know why the advice exists. We know that you don't actually have to have it, but you will have PMI. And we know what our lending products available to us are. There's a couple more important things to know. In relation to PMI, PMI is not permanent. When you borrow on a conventional loan and you have PMI associated with it, the PMI will automatically fall off as soon as you have paid down the original mortgage to under 78% of the original loan to value amount. Also, if home appreciation in your area is high, you can get out of the PMI even sooner by asking the bank to reassess the value of your home when you feel that it has passed that 80% threshold marker. Now, keep in mind there may be some special fees and other requirements in order to do that, but it is an option. With an FHA loan, like I said, PMI is unfortunately permanent, but you do have the option to refinance out of it once the home has reached the level where it would be under that 80% threshold as well. The other very important thing to know when purchasing a home, regardless of how much you have for down payment, is don't buy more home than you can afford. Just because your lender has approved you for a certain amount does not mean that you have to borrow that amount. Have your mortgage professional break out each home you're looking for into a monthly payment. They'll be able to put together projected property taxes, homeowners insurance, and the mortgage itself, and the PMI, so that you have a pretty good idea on what your monthly budget would be. And the third very important thing to keep in mind when you're purchasing a home is have trusted professionals on your side. A trusted mortgage professional is going to be very important to walk you through all of your variable options, and a trusted real estate professional, like myself, will be helpful in walking you through all of the different ways that you can structure your offers based off of the loan product that you go with. Of course, if you're not in this area and I wouldn't be able to be your agent, I also do offer agent placing that's free to you that you could use as well. So if you have questions and need good professionals on your side, please feel free to reach out. I'd be more than willing to reach out in my network to find someone for you wherever you may be. As always, thank you so much for watching today's video. I really appreciate it, and we'll see you in the next one.